All right, what's going on, you guys? This is Eric here with Investor Central Club with Stacks. Just gonna do a little overview of what's going on with earnings today. We've got Applied Materials and NU reporting. We're gonna take a look back as to a couple things from the from this week as well, and take a look as what Stacks has in store for us as of right now, because we are going into the close, and I just wanted to review a few things that I noticed today as well. First off, August 14th, Thursday, going into Friday, you're more likely going to see these little red 0 days to expirations. And what you should understand here is that, especially for right now, I did notice a lot of these. These are very risky. So 8/15, which is tomorrow, 120 in the money, 0 days to expiration calls. Now, why might they be taking that position? Well, DUK is a electric utility company, and if you take a look over at our trading view, you'll notice that they actually have their ex-dividend date tomorrow, meaning they get paid out Tuesday, September 16th, but if they hold on to the stock through tomorrow, then that's how they will get that dividend. Okay, and this one pays about a 3.3%. Now, two things to consider. First off, before dividend date, if they pay a good dividend, there are times where we're going to see a little quick run up. That position that they did get into is actually a pretty high risk position, but because it's in the money, they have the option to exercise it. We also saw a bunch of BP positions come in as well, which is also another dividend that is paying out tomorrow as well, or you have to hold on to it through tomorrow. So just something to consider. These do, in these situations, you do have the opportunity to potentially play a small run up. Usually we will see, but be careful too as well. We usually will see a little bit of a sell off after that ex-dividend date, if they are one of those people that rotates their money and takes those dividends out of in and from different stocks. The big news for today, I know I haven't done too much of an update for our 1K challenge just because we haven't had too much, not too much has been happening with it. But really quickly, in my channel in our Discord, we were in two positions. Okay, the two positions that we were in, NU, we have $10 puts. This one's dropped as much as 60%. It was a fairly small position. We spent like $270 on it, which is about a fourth of our portfolio. But we also were in these Wolf calls, WULF, $6 calls. And if you take a look back as to last few days and continuously throughout the months that we've been in, right, since June we've been in this, we just continue to see buying happening for this. All right, so we've held on. We've seen some unusual calls as well, premiums here and there, 200k here, 50k here, 140, 120k. They just kept buying. And, I love to see this. I love to see just a bunch of green purchases coming in. And what do you know? We saw overnight, overnight, we saw the news of how, that's PPI data. We'll talk about that in a moment. TeraWulf shares rise in pre-market on AI hosting agreements worth $3.7 billion. Okay, so it popped 36% overnight. What ended up happening, we saw our position, we saw it jump quite a bit. At open, it was up 140%. Of my 5 contracts, I took 4 of them off the table just because there is the risk that this might be a, buy the rumor, sell the news, and you could see a big sell-off after this has been reported. Now, however, and this is even earlier today, this was at about an hour and a half ago, we saw that runner go up to 250%. As of right now, I think it's close to 300% as of now. So again, That's what we use our stacks flow for. It's a great tool, great opportunity for you to check what the big money, what the big institutions happen to know. They're often doing stuff behind this, behind closed doors, behind the scenes, putting their money and having discussions of what's about to happen. I'm sure people knew exactly what was about to happen with this Wolf agreement. They don't just suddenly make that agreement overnight and then sign it right off the bat. There's always lawyers involved and things like that. So keep in mind, when we see that type of flow, when we see that type of situation coming in, it's always important to pay attention. So just so you know, our portfolio now for that stacks 1K challenge is at about a 57% gain. So $1,570 is where we're at right now. We do have NU, which is the other position we were in. This one is only down about 50% as of now. We've seen NU continue to kind of drop off. I still have the thesis that it's going through distribution. So we do have earnings for it coming up. And if it does poorly with earnings, we could see it drop off even more. So that's, we're holding on to that position. Usually in a situation where it's down that much, I would even say just cut it. But because it is a fairly small position, and for our 1K challenge, we did get quite a few gains with our Wolf position. We're going to hold on to that and kind of see where it goes. But this is NU. The chart itself, I will say, continues to break down below $12. We did see a big push up. We got in pretty early, and we saw it push up, even tap up above 14 bucks, but never really held that, and it came back down very quickly. There were opportunities to average down, but we never quite did because, again, we're just starting off our challenge. But you can see how it's actually moving down pretty hard, and so I do think it's going to break down below this 1180 and possibly head down further. On the big picture on this too, I do see a bit of a distribution pattern. It's every time it's gone up high, it's pushed down pretty hard, and you can actually see a lot of volume near the top of them, which is not a good sign for something that needs to head up higher. You see volume at the top selling off every time it goes up to those positions. So I do believe we're in what's called the last point of supply, and we're just seeing it kind of sell off at these top ranges, and I do think we're going to see possibly $11.50 or even lower. We're gonna have to see how this earnings goes today, but we haven't seen too much in terms of the news even, and it just continues to come back lower as well. Wolf, you can see I drew out this, broke above our target. Our target was at $7 here for our position. We actually technically had the $6 calls actually, so we could even draw this for $6. And just to see, hey, it's popped up higher. We had it. We held through it through some drawdowns as well. There were actually opportunities where you could have gotten back, sold off for about 40%, got back in around, around the lows. I think we got into this at about 78 cents. Per contract, and it's continued to pop up and higher. We went through a little bit of a bull flag pattern, and as of today, we've seen it go up to the highs, up 55% today. So again, if you guys happen to be in one of those positions with us, I've been posting it all over our Discord. Every time we saw Wolf flow, I've been sharing it with you guys, and today, after two long months, I will admit, we finally saw all of that pay off. So congratulations to those that were in it. I do want to share this one as well. This was great to see. We have one of our members here. Profited $61,000, almost $62,000 off of that Wolf call out. He had 394 contracts, got in at 54 cents. But yeah, now sold off at about 2. This is popped even more, so that could be even more. This was way in the morning. So congratulations to him. Great job, Soba. Okay, we've got applied materials coming up. Let me pull back to earlier in the week. I did my write-up for applied materials quite a bit ago, I think on Sunday or Monday. just go over it real quick. Right here, applied materials preview. You guys can see we did all of it in here. Up 48% from April tariff lows, higher lows, but broke down from an upward trend line. So that's where we're at right now. We'll peek at the chart in a second. Stack shows a lot of unusual puts being purchased, aiming for 2026. Most recent print is $708,000 spent on January 230 calls. Marjorie Taylor Greene and Mark Wayne Mullen bought in May and June. So also keep in mind, I do actually think that there is possibly some news on deck for applied materials because our politicians are purchasing. EPS revenue estimates supposed to be up about 10% year over year for EPS, up about 6 to 7% for the revenue. Previous earnings, they had a slight miss for revenue and dropped 5.6% after hours, even though they beat EPS by 8 cents there. AI demand boosting semiconductor systems growth and margins. Gross margin 49%, highest since 2002. Or 2000, sorry. Strong liquidity, $6.2 billion in cash. ROE at 35%. Full year guide revenue, we just talked about that. Bearish risk, sensitivity to revenue misses. Last quarter showed that even a beat can't save a miss. Trade restriction risks in China, macro slowdowns. And the forward PE, it is a high valuation, but not that bad compared to some of the other big names that we've seen. Answering your question, you are a subscriber of Stacks. Do you need to pay separately for a Discord? If you want the full Discord, yes, it is a separate subscription. But what's pretty awesome about Stacks is if you take a look on the bottom right corner of Stacks, we've actually included a fair share of the Discord channels. You've got the main chat, which is basically where all the, a lot of the action happens to be. You have my channel, and you also have Trades&Gains, which is Max's channel. You also get any videos that are being posted. Those are the ones that are up on YouTube, and our live streams are posted in there. And also the Stacks AI back testing. We just created a channel, so you have a simple place to go find all of it. If you find that it's not enough for you, then yes, of course, go ahead and sign up for the Stacks, the ICC Discord, and you'll get all the additional channels that we have. In most cases, I would basically say it's if you are looking for more things such as education, you're looking for, we have some course videos and other options, education and things like that. So the Discord is where Stacks originally came from. Another thing that you can understand too is in here, we also have the unusual options, big money. These are the original version of what Stacks used to do. You can see it gives us a message for every time we see a print come in. But when you go and compare it to what Stacks has, Stacks is a lot easier for you to go through and be able to filter for what you're looking at. So for example, if I want to just check out what's being purchased and what's big money, I get it in a table format, which makes it a whole lot easier for me to analyze versus going into the Discord and having to check things print by print. So if you are a member of Stacks, I would just say start off, check out what the Discord plugin, how it looks and how you can use it to your advantage. You can definitely participate in the chat and everything just like that. But if you find that you need more and you want more of the education side of things and you want what we originally built with the Discord, I would definitely say you can go ahead and check it out. Okay. By the way, I see 13 of you guys watching. Go ahead, comment Stacks if you're in here because of our Stacks platform. If you're here with ICC or if you're here with TraderLink. A big announcement for you guys. We just announced it last week. We did acquire TraderLink, which is another trading platform that does dark pool options and does gamma and Vanna exposures. And we're working hard behind the scenes to get things integrated for you guys here. Please be patient with us. We've got a lot of stuff in the works. We also have something new coming up called Wave X. It will be released very soon. For some of you that are in our Discord, You've already, and Stacks, you've probably seen a couple of the screenshot images of what we're offering. Yeah, just be patient with us. I promise you guys, you'll get these tools very soon. We're working hard to make sure, that everything's running smoothly so we don't encounter any errors during market open. All right, let's go through. Let's see if there's, right now I always like to filter for the buys just to see if there's anything in particular that stands out. If we see a lot of continued purchasing, I will point out the ones that I've been calling out for our Discord so far. Intel, we're seeing a lot of buying for Intel. We also do have what I like to think of as a foundation that's built for it. 2 days ago, we saw some Intel Stacks AI calls. So again, anytime you see Stacks AI, you see them buying, you see them purchasing, and in this case, they spent $1.08 million. That's something to consider. And it sounds like we just saw a pop on Intel too. Let me switch over to that real quick. Intel just saw a pop right here just a few minutes ago. Do we have any news about it? Trump administration says discuss U.S. taking stake in Intel. Yeah, so there you go. All right. A lot of times what ends up happening is we see them loading up before the news hits. So that's why in this situation we're seeing Intel pop up higher. So yeah, one of my positions for Intel looks like right here is already up 57% over the course of 2 days. Actually, I think I got into it yesterday. Sometimes it's worth waiting a moment or two after a Stacks AI call. Sometimes you do see them come back down a little bit. You can get a better entry than them. The goal here is to make sure that you double check what Stacks has to say, and whatever Stacks has to say, I like to jump in on it depending on what's going on. So look, we're seeing an additional Intel 0 days to expiration. They're buying it right now, right as the news is coming in, and they're expecting it to possibly push even more and even further. So right now it's just a rumor. So I think once the news hit, you'll probably see a huge pop and then it probably sell off afterwards. But this kind of gives that hint. They're expecting something to happen by tomorrow, or at least this news to kind of ride the wave up. And then you're starting to see them purchase for the 22nd of this month, which is next week, next Friday, and then October here as well. Grandizer, if you don't mind, I'm going to do Circle and Core Weave after the closing bell. I just want to keep an eye as to what else we see before close, and then we'll jump into Circle and Core Weave afterwards. That way I can give you a little bit more of what's going on TradingView and things like that. But let's see. Yeah, additional Intel coming in, and you'll see it's been happening. We even see it. Okay, for those that are new, the blue bars are our unusual prints. They are aggressive enough with a large expected move. In this situation, they're expecting Intel to jump almost 45% from where it's at, buying the $32 strikes. $133,000 spent on that. So just something to consider that. Okay. If you see the gold, right, with the little big money emoji in the background, that means that it's a big money position. They've spent over $1 million on that option. And for those of you that understand it, understand if it is going to be combined with this out of the money print, meaning they're expecting a large move in a certain direction, those are definitely something to consider, because at the end of the day, that $1 million will go to zero if it doesn't go past that strike by that time of expiration. So you also see if it's combined big money with unusual, you will see the big money print. You will see the blue and gold. You'll see the blue with the big money emoji in the background. And that actually brings up this too. You guys are lucky here today. Trade Desk just saw some calls being purchased for the $65 strike for 2027. So they're buying a lot of time. They're expecting a 28% move up from this $50 range up to 65, and they spent almost $2 million on that position. So Trade Desk, I do know, I think it was Kathy Woods even just took a position in it after this huge drop down. So, you know, maybe they're expecting that this drop was unwarranted. Real quick too, if you take a look, Intel looks like it's going to continue to possibly push up a little bit higher. Give me 1 second. My headphone just died. Let me switch to the other one. Yeah, Intel pushing up just a little bit higher. Looks pretty good. I always love to see. If you guys are in our Discord, under our club profits, you'll see. All right, Dylan right here, DMD2, just had a 40% return off of that Stacks AI print. Another, what was this one? I mean, $200 off this. I know, you know, again, depending on your portfolio, even this could easily be a 40-50% return in just a couple of days. And plus, this one's for January of 2020. Yeah, 2027. You can't get January of 25. January 2027. So, you know, buying, you don't have to play the high risk 0 days to expiration or just weeklies. Stacks and what our platform really is about is showing you guys how you can still make these profits with longer term positions. And even such as this too, you know, purchased in June, has an expiration till November, 300% return. Okay, you can still get these types of returns getting into these types of longer term expiration, lower risk, but still high returns at the end of the day. Yeah, I love it. Somebody else is typing too. Does also look like there are some people in Intel positions that are possibly taking some of their profits already after this pop. But I will say there are quite a few people loading up for tomorrow's and also this October next week as well. So these are good positions to consider if you're looking for a position to take. For me, I am in the February 2026 ones. Those are up 71% at this point. I'm going to share that too. Some calls. I mean, these are pretty, you know, a fair price. 80 cents for this for next week for over 25. It's got to move a little bit over $1 for that. Break even's obviously going to be at $25.80. But if there really is going to be, you know, this, I feel like this rumor has kind of come back and forth, especially with, you know, this administration. But we'll see what ends up happening with it. You know, this could be something where they just kind of pump up the stock price and, you know, eventually sell off upside. We saw another one, $2,500, 120% return for these ones, shorter term. So one thing that you can do is you can always look at, number one, look at what Stacks is buying. Consider if you want the shorter term position, if you want the longer term position, what is the premium that makes the most sense for you. You can see for mine, I just posted this. I got into the February 2026 ones, $32 strike. So it's a bit further out, but I like buying a little bit more time if I can. But yeah, you're seeing them, you know, some of them are possibly taking some profits already from this. That's why you see the sells. But here's the big question is, are they getting into puts, and are they getting into puts heavy? $154,000 on this one, saying it's going to drop by tomorrow from where it's at, that this might be the run up. But I don't see a lot of it coming in. I just see one of them. Okay, so it's enough for me to say, okay, I still think Intel's headed a bit higher at this point. Another one I will point out too is Ethereum. Ethereum, yeah, we continue to see them buying in Ethereum. This is the ETF for Ethereum. It did drop a little bit today with today's PPI news. Oh, that is something else I wanted to point out. We saw a producer price index come in extremely hot, which means that there is still inflation on the producer side, which eventually will lead into CPI coming in a bit hotter or a bit higher. So the markets did react quite negatively to it, and that's just something to consider. But it looks like a lot of stuff is kind of recovered a little bit from it, so we'll see how that plays out. Applied Materials didn't really see too much additional since Monday, though. I will say this big money one is something to consider. They're purchasing for Friday, saying it's going to break 190, which it did already break 190. This $2 million is going to go kaput if it stays below 190 at this point. So if we checked open interest, see if that 3,800 is still higher, in open interest, then we could consider that they're probably still in that position. We did just see the close. I'm going to pull up trading view so you guys can see. Let's go in. The two that I'm interested in right now, we got Applied Materials, which is reporting, and we got NU, which is reporting. So Applied Materials, our thesis is we think it should be going up. At least that's what Big Money is saying. NU, my thesis with our Wyckoff distribution, I mean, technically it doesn't have to happen with this earnings. It could happen further down the line. We could still see it pop up toward 13 to 14 bucks and then drop afterwards. But that's my thesis for these two. So I'm going to hold on, see what's going to happen in these positions. Most of these are going to probably report in the next 15 minutes. No, Applied Materials just dropped off a cliff. Will it recover? So keep in mind too, so something like Oracle, or not Oracle, Cisco that we saw yesterday, we saw it sell off and then it actually came back overnight. So NU, do we see anything? Not yet. Starting to move. Am I wrong on these two today? That's why we call them earnings gambles. Applied Materials down about 8.5%. NU's only up 1%. Not it's flat technically from close, so nothing to say about that just yet. I'm gonna peek over at Intel again, see if anything happened after hours. Yep, still going up higher after hours. So yep, I've been posting these in our Discord. You guys can always go look back on those timestamps. I'll share them with you. But again, the moves happened. Tomorrow we'll see. We'll see if more news comes in. And we'll see what ends up happening with it. All right, NU. Still flat at this point. It looks like a big candle, but if we zoom out, it's really nothing. It's just popped back up over $12. Still nothing on the earnings side of it. Applied Materials, EPS beat the estimate. 738. What was they had a double beat. So I'm sure there's something inside, inside what they've reported in terms of future expectations But yeah, that's, for a double beat, and it's it's an okay double beat, not the biggest, but it's still a double beat for Applied Materials. NU, let me see if I find anything on Twitter for NU. NU usually reports super late, so we'll see. Applied Materials down 10% now. Just real quick, I'm gonna peek over back at Wolf, see if anything happened. Yeah, after hours selling off a little bit, but that's expected. Some profits being taken. What else happened? We did JD reported earlier today in the morning. Huh? Did it not report? They had a beat. They had a big pump and then came back down. And then Weibo. Weibo had an earnings double beat and popped 11% today. All right. Let me double check. What other earnings? Oh, we're seeing NU starting to drop a little, but nothing's out yet either. While we're waiting for these, go ahead, give me that thumbs up on the YouTube if you guys can. I don't think I've seen more than like 5 likes at any point, so I want to see you guys hit that like button. If you haven't already, I'm sure those of you that are in here are probably in because you've already subscribed and hit the notification bell. But anytime that I do go live, especially for earnings and things like that, sometimes these aren't going to be necessarily scheduled, but I do try to get on around 12 to 12:30 Pacific time. So an hour, half an hour before market close, especially on earnings days, and try to see what we can see, if there's any sort of last minute trades being taken, things like that. And so I want to remind you guys, earnings is always going to be a gamble. For example, we saw that big money. That big money is going to be hurting. Earnings is a double beat for Applied Materials, but in this situation, it's not enough. And of course, that's why we're going to see price react negatively. There's possibly some bad forward guidance. They might have some headwinds. They might have something in terms of, say, of either tariffs or slowdowns of some sort in the consumer or in the economy. And on my charts, like I've always said, I draw these blue lines for you guys to show you where resistance and support happen to be. Look at that. Came down to this blue line, popped right back up above it. Now, obviously, it's very hard to get it drawn exactly to the cent, but you can consider it to be a little bit of a range where buyers and sellers happen to be, and that's where you can expect the buying and selling to potentially push price around before it makes a decision as to what direction it wants to go. I'm just on Twitter trying to see what I can find in terms of updates. There's still no updates for NU. Doesn't look like earnings has come out for it just yet, so we just got to be a bit patient for it. Still nothing. Intel's still going higher. So since this little pop we saw, Intel's up, what, 7%, 7.5% already? Just based off of that rumor, okay? All right, while we wait for NU, let's talk about let me answer your second question. Do you remember what's the biggest winner you ever had and biggest loser since you started? Okay. I was a part of the GameStop and AMC huge run up. I did see some pretty massive gains in terms of an AMC position that I took. I have to look back as to exactly what the thing was, but I made about like 30 grand off of. I started with like $2,000 and kept taking different positions where I saw that massive squeeze. I've seen quite a few 10x to 20xers in my time as well. Off the top of my head, I saw the Lululemon puts that we took just about a few weeks ago. I've seen a Cisco earnings run up. I've seen, oh, sorry, not Cisco, it's Oracle. Sorry, I always get those two mixed up. What else? I've been in. Shoot, I mean, I've been doing this for making these callouts, and a lot of them I will say start off with inspiration from what Stacks has to say, right? I have had multiple situations where I took $1,000 or $2,000 and brought it up to $10,000 or more. In a lot of those situations, I end up taking, cashing out on it, moving it to my account, my other accounts. So it is very possible. So for example, right now, this 1K challenge that you're seeing, we're already up 50+% on that. But again, it is making sure that we understand where our risks are. And it's one of those things, I can't promise you returns, but I can promise you that we're going to take, solid, data driven and data backed type of positions that are going to minimize the risks that we're going to see. Because a lot of the times, again, the big returns that you happen to see online, especially Twitter, things like that, first off, you got to make sure they're not just paper trading. But second off as well, if they're gaining, multiple X returns on a daily basis, are they screenshotting other people's returns? I've caught a few people doing that. And are they taking high risk 0 days to expiration trades? Those are the ones that generally lead to this sentiment that day trading is just gambling. But in our situations, we're taking the charts, we're taking stacks, we're looking at what people are buying and understanding where the risk lies, and we're taking calculated risks with this. Never have I taken 100% of my portfolio and put it in just one position. And you never should be doing that because you're putting way too much risk on one thing. But I've seen, and same with Max as well, with our earnings callouts, I've seen multiple situations where you're going to put maybe $100 or $200 in an earnings position, and you're going to see that multiply by 5 to 10x. So Chipotle, we saw, put in $100, came back, and it was a $800, $900 return. What was the most recent ones I've had with Ethereum recently? The ETHA, I saw 100% return on that just a little bit ago. Let me scroll up here. So, I mean, if you're in our Discord, if you're in Stacks, you're more than welcome to go check out my channel. You might have to scroll pretty far back in here too, though, but 100% there. This was earlier in it, 82. PCG, this one's kind of hovering around 50% right now. Did a lot of earnings reports too. And then as well, you got to understand our Stacks returns are up here for you guys to see. 91% hit rate, on average 243% average return across 400 prints that we've seen in the course of 2 years. So, it's one thing to say, hey, this I did this for a month, or I did this for 2 months, etc. Stacks has been consistently showing that there are profits to be had and profits to be taken, but it's up to you to be willing to take some of those risks, and to be watching out for those too as well. So, I do now have a channel for the backtest. I'm going to do my best to update all this. There is a playlist. If you go under right now on YouTube, go under our channel, go check out our full playlist for backtests, and you'll see there's 24 of those out there. Maybe I think 25. I did a few that were mid-month as well. And just take a look at that. The numbers speak for themselves. I don't feel like I should need to come here and tell you, dude, 243% on average is ridiculous. That also brings to mind as well, we had it was like a 10 to 20x return on a BABA print that came in January. And so, obviously the most you can lose in a position is going to be the full 100%, which is kind of funny. Reminds me of something that President Trump said, that we are decreasing prices by over 100%, sometimes 200 to 300%, which isn't possible. You can't lose more than 100% of your position, but we very rarely will let that happen in these situations. If we do, it's either a earnings call out where we've calculated, hey, I'm willing to put this $100 to $200, and if it goes to zero, it's not going to affect my portfolio to such an extent that I won't be able to continue trading. But again, these are calculated probabilities that you want to consider. We are not here to gamble. We're here to let our charts, let our data speak for themselves. And a lot of times we're kind of just piggybacking on what the big money is saying. So you can expect, like, this Intel position that we are in is a very, very much a piggyback upon what has happened and what is going on, because there are people behind closed doors that are making decisions and making, creating the laws and putting money in places that, it's not you and I putting, even if we put 100K in Intel, it's not going to move the needle very much. You got to get those whales to drop the millions and billions on it for it to actually move. And so what we're doing here is we're allowing the charts to play out. We're trying to figure out when they're getting in and getting out. And that's what Stacks does a great job of helping us do. Well, are we starting to see? Still don't see anything with NU. Might just be buying. Let me pull up and see if I see anything. Yeah, nothing on NU just yet. Applied Materials. So this could just be a gross overreaction at this point. Okay, their forecast of the quarterly revenue is below estimates, so that's why the shares fell. In this situation, you have, if your contract is for far enough out, you could hold on to it and hope it recovers. For example, let me show you Cisco. Cisco yesterday, man, this chart right here. We saw this live, guys. We saw this drop all the way down, and then I signed off, and it kind of chopped around over here. Signed off, and then later in the Discord, somebody's like, oh my God, Cisco's recovered. Came all the way back up just a little bit, and then throughout the rest of after hours and pre-market, it kind of made its way back down. Now the issue is that if you're in short-term dated options, if you didn't get yourself out very quickly right at open, it recovered very quickly too, and it kind of just chopped around for today. So overall, technically, it is down after earnings, but not so much that, a lot of situations, there's three things that can happen with an earnings report or an earnings reaction. You can see it go down, you can see it go up, And the one that sucks for both sides is for it to just kind of stay in the same range. So, this was never expected to make a huge move, but through the day, or through from close to the end of today, it's only down 1.6%, which is a very small move for earnings. So consider that. Now, Applied Materials, are we going to see it react? It's down 10%. Okay. But I do think with a name like this, there's a good possibility we'll see it actually get snatched up at these levels. It's right back to where it was 2 months ago. Okay, so it gave back those gains. Here's the thing that, like I said, we're in this uptrend. We've broken down from it. This kind of was a bit of a retest toward it, and as of right now, we've seen it come back down. Well, Michael, if you've lost a lot of money on bad earnings calls, maybe we should look at your record and consider maybe you shouldn't be just playing earnings. Maybe you should be looking at situations where there is no earnings coming up, such as Intel, right? We already had earnings, but Stacks and what the tape has said is that, hey, we're headed further up and that there's a lot of buying, right? So, well, I want to point out, Michael, too, if it is, number one with earnings is you're playing with high volatility. Like I've said, volatility is like, it's like a big wave. The bigger the water, the bigger the waves happen to be, the more likely you're going to get crushed, and you're going to get, you're going to drown in there. Sometimes, and my favorite plays, I will say, yes, earnings I've gotten some big returns off of, but more often than not, especially with Stacks and the guidance that Stacks has, it is not an earnings play, but a news report that's about to be released that, there's insight into. And that's what Stacks really does is, I wish I had tracked this from the beginning, is how many of Stacks AI positions are earnings plays and how many of them are just news that's about to be released. We've seen a lot of situations where a partnership, an agreement is being made, and they're getting into calls behind closed doors and they're loading up on it, and once the news hit, you see a big pop. Easy 50% returns, sometimes you'll see 100 plus. Okay, so earnings, I will say, is really just gambling. That's why we even a lot of times put it under our degenerates channel on our Discord, because that's what you're doing. You're gambling with it. It's better to, in a lot of situations, better to wait for the earnings report to happen and then play after the fact. Or if you happen to own shares of the company, be a seller of the options and make money off the IV crush afterwards. Okay, so I don't know if it's my hell or Michael, but ultimately, if you've lost a lot of money off earnings calls, go take a look, review your work, review what's happened, and see what it is about those, when you're wrong with your earnings calls, how much have you lost? Are you more often wrong or right? And if you're more often wrong with it, I would say that's probably the wrong strategy to be going with. Honestly, you're really just gambling there. We love to do earnings reports and analysis for you guys because that's where a lot of big movers happen. And if you're on the right side of it, it can be very, very profitable. Okay? But we've always said, like, I'm going to reiterate this. If somebody tells you, I knew this was going to happen with earnings, then you should ask them, why didn't you put 100% of your money why didn't you cash out, sell the house, put everything into it? Because if you know something's going to happen, load the boat. Okay? Nobody has a crystal ball into the future. Everything here is going to be probability. And even sometimes, I will say, we've seen big money be wrong at times too. They're going to spend millions of dollars on a position. Earnings is going to, let's say they spend $5 million on calls for an earnings position. And actually, you see where they had a double beat, and it was a pretty good double beat. but guidance was poor. Something else ended up tanking the stock afterwards, right? So it's always about probabilities. You need to play your probabilities. My background actually, before I started doing a lot more trading and, helping, doing what we do with stacks, I've taught math and especially taught calculus for high school students. And that's, I bring a lot of that in terms of probabilities and statistics and calculations. That's where my forte and my background allows me to and helps me out with these types of things. But I will also tell you this too. When I was back in college, I loved to gamble. Made money playing poker, but also definitely lost money at the casinos and things like that. I don't go to casinos anymore. I don't gamble anymore. I don't even do, FanDuel and DraftKings. I don't do sports betting, okay? Because I know myself. It's fun. You get a high from it, but more often than not, you're going to be losing money. So, and the same idea with earnings. My threshold, honestly, for an earnings position, with my portfolios, I'm willing to spend maybe $100 to $200 on an earnings call and an earnings position. And the only times where that might go up a little bit, maybe up to $400 to $500, is if I've just seen indisputable evidence from stacks that, hey, it's just calls, it's just them buying, things like that. And I will say, when you look back on some of these situations, it's kind of like, oh my God, we should have known. There's one big one from when we first released stacks. It was ARM calls. Before ARM was, they're just getting their foot in the door. They're just starting to build themselves. And we kept seeing them buying leaps and millions of dollars of leaps. And even then, before their first earnings, I had a few calls, and I ended up, reducing my exposure down to just one, because I would rather keep the money and run. And if I ended up being wrong on that position, being okay with that, whatever I did end up losing. So, I hate to nag or lecture you here, but at the end of the day, go take a look as to your own record. I think one of the things that helped me out the most with my trading was I sat down, downloaded what was on my Robinhood in terms of all the trades that I made, and I checked what was it that I was making money off, what was it that I was losing money on. And one of the things you'll notice with me is I don't trade SPY and QQQ. I don't trade those large ETFs, because I noticed on my spreadsheet that my biggest losers were SPY and QQQ. Okay? But my biggest winners were always going to be these situations where I could look back and say, okay, what are the things I'm checking off? Number one, the chart looks good. There's a bull flag if it's calls. There's a bear flag if it's puts. There's something in the chart that makes it look like and makes me consider that it's going in that direction. Number two, stacks is giving me indisputable evidence that they're getting in on a certain side. Okay? So if it's just calls and continued call buying, continued money being pumped into it, equity being purchased. You can also take a look at insider trades and look at our politician trades as well. Do those things all align as along with it? And as you gain experience in the markets and see what's going on, there are signals and signs that allow you to understand, okay, those are the things that are helping me notice that that's what's about to happen. Okay, so I'm sorry about the applied materials. In this situation, I'll say stacks was incorrect on this specific one. They did have calls being purchased and big money being purchased on this, but I will even say, when we see this earnings update, it was actually a double beat. So in a sense, they had the right sentiment, but price will not always react in the exact same way that you expect. Right? You can see a double beat and see price tank. You can see a double miss and see price shoot up. It has more to do with what's in their report of what they expect for their money making in the upcoming quarters. And yeah, 11% down for applied materials, but I do think that this name is very quickly going to get snatched up. See, 5% beat on earnings, EPS, 1% beat on revenue, which again, compared to what we've seen, isn't the biggest beat in this situation, but it's still a beat nonetheless. All right. All right, we still haven't seen anything happening with NU. I'm going to get to Grandizer's questions about here. You asked about Circle and Crowdweave. We'll come back to this. CRCL Circle. Is it time to buy? That's the big question. I kind of do like where it's at this point. I'm not going to lie. It did break down below this area of supply and demand. Still have no... I mean, they just had their first earnings. So this is the number that I really disliked was they missed their EPS by quite a bit. They do have decent revenue. I mean, decent meaning they beat it. But $658 million is really nothing in the grand scheme of things. I think it's a decent place to maybe consider grabbing shares or looking for the long-term out. It's filling this gap that we see right here, and it's starting to recover a little bit from there. Yeah, gap definitely filled. Another thing is we see it kind of tapping this top, this previous resistance. Realistically, if I had drawn something, it would have been right there. Okay, so it's acting as support. What was previously resistance is now support. Now the issue with this though, and let's take a look at VRVP, is that if we break down from here, the next area we're going to start to see is probably this 128, and there's a possibility we could come down to about 120. So this is where everybody's at. Okay, so obviously the bulls are going to do their best to keep it above here. Okay. It is one of those newer names. And as of right now, I could definitely say this whole thing could just come back down to this range. I would not be surprised to see something where it would drop down, come back down to this range, peak below, and then maybe start some sort of accumulation down here. Okay? Let's take a look at what the flow says for it. Circle. I mean, I think you can see all this. At least right now, I would probably not consider this week. I think this week it could see a little bit lower. The puts are all aiming for Friday. You'll see that right here. All aiming for, some of them aiming for next week. The calls that we're seeing end of the year, I would say right now, I think it's gonna head a little bit further down tomorrow, and I think once we see on Monday, I would not get into this just yet. I would wait for some additional buying to start happening. We also don't see any equity being purchased on it right now. Okay. CoreWeave, and another. Okay, so what I learned about GameStop and AMC, and I kind of want to bring you to the attention of right now. Okay, CoreWeave, Circle, these are new IPOs, new companies that are making a big fuss and a big splash in the markets. I would even say Figma is the other one as well. Always be careful. It's a hot stock, especially when you start to hear, and I like to use the grandma indicator. If grandma and people that usually aren't participating in the stock market are the ones that are starting to talk about it. CoreWeave also looks like it's fairly bearish as of right now. Let's take a look at this chart real quick. So the question here is this a breakout and a big retest for us to go back up? It is a bit of a sign of weakness at this point. So, I mean, we are at resistance, but if you take a look at the volume right here, we very easily could see this drop toward 87, 82. That's where you have more buyers. And worst case, it could come all the way down to like 65 and maybe even come down towards 56. So This pattern reminds me a little bit of what happened with Palantir at the beginning. CoreWeave right now is losing money. Yes, revenue is 1.21 billion, but until they are able to prove that they're making money or have good guidance for the future, that's where I would worry. So look at Palantir real quick. If I go all the way back to the beginning of Palantir, which again, it's been a few years now, but what does that pattern at the very beginning look like? Right? Little accumulation at the beginning, huge push up, came right back down, and over time came down even lower than the IPO price. So, you know, be careful when it's newer names. More often than not, especially names that maybe, you know, earnings where their earnings is technically negative or very close to negative in this situation, right? Palantir like barely made any money or wasn't really making money at the beginning, and you know, did very poorly for, you know, did well at first and then started to drop further. So we see this accumulation and a distribution pattern. CoreWeave, wouldn't you say, kind of has that look right now? Accumulate, big money gets in, makes a campaign to push everything up, bring it higher, and then it brings it right back down. There is a possibility we could see it accumulate over here. We could also see it come all the way down and accumulate down here. And then worst comes to worst is you could see it come all the way down and accumulate lower than what the IPO prices are. I can't tell you what's going to happen with this right now, but the company as overall, it needs to make sure it starts to make money or have a future plan to make money if it's going to end up in those situations. So I would be more bearish on this than bullish, especially as we see it breaking down below these ranges. Same with Circle. Same idea. Okay. If it's a good company, eventually it'll start to make its way back up. But as of right now, it looks more bearish than bullish. It's also broken down these ranges. Yes, it's filled that gap. But do we necessarily see buying coming back in? I would definitely say I think Circle is going to head back down to about like 120 before we see a big bounce. All right, NU. Has anything happened with NU yet? Nope. Still flat. We'll see tomorrow what ends up happening. If we, you know, technically our position is down, what, 50-60% on this one. It's really just playing the rest of it out. It's one of those few positions where, you know, I am willing to let this NU position go to zero if we are incorrect with it. Our wolf gains are more than cover what we've lost with NU at this point. That's why our position, you know, I think we've got like $100 left in that position that we're waiting on. Help me out, guys. Hit that like button. I gotta play the YouTube algorithm game here. That's basically what it is. If you guys have questions, anything else you want to see, I've basically done the reviews of what I'm looking at today. I'm just waiting for NU to report, but it's not exactly the greatest look when it takes this long for it to release. Oh, let me see real quick. Oh, for all those waiting on NU, it is scheduled at 5:15 p.m. Eastern. So we've got another 40 minutes till it drops. So we're just waiting on that one. Ooh. After hours, UNH. UNH. What is their news? Yeah, it was Berkshire Hathaway acquired 5 million shares of it. That's what pushed it up. UNH. We got a lot of people in that. Chemo's been making calls for it. It's down, down near the bottom. PE ratio at 11. Yeah, it's definitely one of those situations where you can expect them to purchase, up 8, almost 9% right now. Awesome. Got some profits to wake up to tomorrow. Alright, I'm not going to wait around for NU earnings. I'll post it in the Discord once it does report. We've got another 40 minutes till it reports, so I'm not going to sit around waiting for it. Probably will not be doing a live stream tomorrow. We'll peek over at what's coming up next week in terms of earnings. The very least, we will do a Wednesday earnings closing bell every single week. So, keep that on your schedule. Make sure that you have that and you're ready to join on it. Please, just asking you guys, hit that like button if you enjoyed what we did here today. It's just a way for us to help push this out to additional people in the world, on the interwebs, as I may say. Hope you guys profited this week. Michael, for you, I would definitely say, consider and take a look back as to your record and figure out what it is that needs to be done. If you want to be profitable, you got to stop treating it like a casino. So understand that. Always happy to do this for you guys. Our closing bell show, I think we've now done like 25 of these. So, we're going to keep this going. If you guys want to, there's some links down below in the description box. You can check out the Substack, the Beehive, Max's YouTube as well, and you have all of our social media links too. So, all right, have a great one, you guys. Enjoy the rest of your day. Have a happy weekend. We will be back. We'll be trading tomorrow in our Discord and things like that. So, hope to see you guys there. Real quick thing too, for those of you that are not in Stacks, we do have a discount code that I just got them to put it together. Closing Bell 20 will get you 20% off on Stacks, so you guys can go ahead and check out the software and try it out for yourselves. I know those of you that are in TraderLink, those of you that are in our Discord already understand how great and how powerful of a tool it happens to be. Okay, Grandizer, have a great one. I'll see you guys in the next show.